you've been waiting for mortgage rates to fall before you buy or refinance, this week threw you a curveball. A jobs report that sounded like great news for the economy turned out to be tough news for your rate. Let me explain why and what it means for you. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. This is your weekend update for the week of June 5th, 2026. Here's what happened. On Friday, mortgage rates jumped to a 2-week high. The reason was a jobs report that came in much stronger than anyone expected. The country added 172,000 new jobs in May. The forecast was only 85,000. So we came in at about double. Now, why would good news or good job news push your rate up? It comes down to how rates work. Mortgage rates are tied to bonds, and bonds care most about inflation. A strong economy can mean more inflation. So when jobs come in hot, bonds sell off and rates rise. That is exactly what played out this week. There was a second punch too. Every month, the jobs numbers from the prior 2 months gets updated as more data comes in. This time, those updates were big. March was revised up to 214,000, and April was revised up to 179,000. In one morning, the job market went from looking soft to looking strong. That changed what investors expect from the Federal Reserve. Just a few weeks ago, the market expected the Fed to cut rates. Now the market is leaning the other way and even pricing in possible rate hikes down the road. When those expectations move that fast, your mortgage rate feels it. So what does this mean for you? First, take a breath. Even with this jump, rates are still below the highs we saw on May 19th. The 10-year Treasury, which rates follow closely, is near 4.54% right now versus 4.44% last week. Markets are open as we record this, so that number is still moving. There's also a path back down. A confirmed peace deal between the U.S. and Iran would likely bring rates lower because much of the past 3 months of rate movement has been about the war and its effect on fuel prices. And the job data has been bumpy lately, partly because fewer companies are answering the government surveys. One strong report does not make a trend. So this week, a bump is a bump, not a verdict. Here's where rates landed this week. The 30-year conventional is averaging 6.66%. The 30-year jumbo, 6.70%. The 30-year FHA, 6.18%. And the 30-year VA is at 6.19%. These are national averages from Mortgage News Daily, not an offer to lend. If you're watching the housing market, there is some good news under the headlines. Builder confidence rose. Existing home sales ticked up. And in much of the country, there are still fewer homes for sale than there were during the pandemic, even though a few states now have more. The right move depends on your zip code and your situation, not the national headline. This is also why I want to point you to a few pieces we are sharing this week. One is titled, "Your Mortgage Payment is About to Jump in 2027. Your Rate Has Nothing to Do with It." Another is 7 credit words that quietly cost regular families thousands of dollars a year. A third is, the contractor isn't the risk, the lender he brings with him is. And one more, from renter at $30,000 to $119,000 wealthier by 50 without a raise. You'll find these and several more below the video or to the right of your screen, depending on the device you're using. And here is something that can help you right now. We built a rate reduction illustrator. You put in your current mortgage balance and your current interest rate, and it shows you exactly what it would take to bring that rate down to any number you want. It turns a vague hope into a clear plan. Remember, strategy beats rate always. The rate is one number on one day. The plan around it is what builds your wealth over time. If you'd like to see what this looks like for your mortgage, just reach out. Call us at 800-306-1990. That's 800-306-1990, and we'll walk you through it. One more free tool worth knowing about. KeySteps is a free platform with credit monitoring, identity theft protection, and household budgeting tools all in one place. You can find it at rsrlinks.com/keysteps. Looking ahead, next week is all about inflation. On Wednesday, we get the Consumer Price Index. On Thursday, we get the Producer Price Index. These two reports tell us whether prices are cooling or holding firm, and they could move rates in either direction. So if you're close to a decision, it's a good week to stay in touch with us. This is your weekend update. We appreciate you listening, and we'll speak to you again next week.